Well, Dave, we heard from the Finance Secretary, Ralph Recto, earlier on saying that he is upbeat. The time is now. If you want to invest in the country, you have to do it now or you'll miss the boat. Let's speak to Secretary Recto, who is with me this morning. Good to have you with us.
Thank you. Thank you for having me. Welcome to Manila.
Thank you. Thank you. Great city. There's so much noise out there. In fact, we had the OECD coming out to say that it's cut its growth projection for the world to 3.1%, and that's on the back of uncertainties. Is the Philippines able to keep to its target of at least 6% growth, given what we're seeing right now?
Yeah, we're pretty confident that we will hit at least a 6% growth. The World Bank, the IMF, and many other institutions are saying that we're on track to hit the 6%. Our macroeconomic fundamentals are very good. Unemployment is down. The middle class is growing. We're investing more than 5% of GDP in infrastructure. We have elections also right now, and during elections, there's more spending. So we're pretty confident we'll hit, at the very least, 6% this year.
At least 6%?
Yes.
The question really, can you get to higher than that? Because in my conversation with President Marcos quite some time ago, he did say that the country should be growing at 8%. Can you get there?
Well, hopefully, if we had more investments, and that's why we passed the Create More law, and equally important, I suppose, is reduction of interest rates. It would appear that because inflation has been controlled in the Philippines, and inflation today is something like 2.5%, there is room for a rate cut in our next... so we're in an easing cycle. It's a high probability that we could do a rate cut also in our next meeting.
Would you like to see that rate cut? Because we know the Central Bank Governor rate cuts on the table for the year.
That's correct.
You're hoping to see a rate cut?
Yes, our analysis is that in the U.S. it's possible that they have a 50 to 75 basis point rate cut. In our last meeting, end of the year of last year, I remember that we were looking at a 50 to 75 basis points rate cut as well this year.
How many rate cuts would you like to see for the rest of the year? What impact would that have on the economy?
Hopefully, at the minimum 50 and probably 75%, 0.75 basis points for the year. That will help propel growth, consumption, and investments moving forward.
Can you quantify that? That will help propel growth by 1%?
By at least 0.5%. And if we could reduce it in the next 2 years by 150 basis points, probably even higher. Now, during the last decade, we were growing at an average of 6.4%, when rates were roughly at about 3.9%, 3.4 to 3.9%. So policy rates now is about 5.75%. So if we can get them down, plus more investments, because we passed the Create More law, and a rationalization of our mining tax, then hopefully that we could grow up to 7% or even higher later on.
The BSP also said that
it's a very challenging global environment.
It is a challenging environment, and we're seeing a lot of volatility in currencies in particular on the back of what we're seeing in the dollar. The BSP did say that it's keeping a close eye on the currency. How concerned are you that those rate cuts will cause a weakness in your currency?
Well, so far the peso has been strong. We appreciated 1% last year. It's relatively stable. Our macro targets are between 56 to 58. The peso today is trading at 57, thereabouts. Yeah, the peso has been relatively stable. We've been in roughly the middle of the pack as far as ASEAN is concerned.
But you still...
Yes, correct. We're watching out on that.
And you're also watching the Fed, and you're also watching what it does with rates, and you're watching the dollar.
Correct, because it affects the exchange rate and inflation as well. So we're not targeting a particular exchange rate, but we're watching inflation. And like I said, today inflation rates are, I think, 2.1 for core, and headlines about 2.5% for the year. So there seems to be room for a rate cut.
The Fed, of course, out with a decision on Wednesday.
Yes.
What do you see the Fed doing, and what do you see the Fed doing for the rest of the year?
Hard to tell.
Hazard a guess.
Yeah, but they're saying that there will probably be 3 rate cuts within the year. They could do a pause, maybe tomorrow, but then I think they're on an easing cycle as well.
Let's talk about your fiscal position. In our last conversation in Davos, you did say that you're quite comfortable with where you are right now.
Yes.
Are you still, in terms of deficit, do you see that expanding, weakening?
Question. No, we're following our fiscal framework plan. We started with a deficit of 7.2% during the pandemic. We're down to 5.7. This year we are targeting 5.2%. Next year it's going to be 4.7%, 4.2, and then in 2028 about 3.7%. So we're on that path. We surpassed our revenue targets last year. We've had the highest revenue to GDP ratio in the last 27 years. So that's very good.
So you continue to privatize assets.
Yes.
What's in the pipeline?
You have the CBK. This is the hydro power plant, electric power plant. There are a number of assets for privatization. We're opening up also for retail investors because there are many government assets that are non-performing and it costs government to maintain them. So might as well privatize that. And you were talking about even small properties that if bought by the private sector or even individuals, then they can create more value for the economy.
So is there a way of quantifying how much that would add to your coffers?
This year we're looking at roughly 100 billion. That's in the target revenues of the Department of Finance.
You talked about how you're optimistic for 2025. What could be the headwinds?
Well, the headwinds are global growth may slow down, but like I said, 72% of our economy is domestic, it's consumption driven. So far, our BPO industry is growing. That's our service exports. Our OFW remittances continues to grow. We hope that's not affected by these headwinds as well. Tourism is improving. We had more than $10 billion last year. And there seems to be interest in investing in the Philippines. Samsung is talking to us for a possible investment of more than 50 billion pesos. They're applying under the incentives for CREATE and many more.
There are murmurings on the ground on the back of the arrest of former President Duterte. Might that affect the prospects for the country? Might that impact investor sentiment?
I don't think so, because that's nothing to do with their macroeconomic fundamentals to begin with. There was a slight reduction in the stock exchange, but very subdued. But the peso appreciated on the day that he was arrested. So it could also mean that the international community is looking at how important the rule of law to us is concerned, and that's a part of governance as well. With regard to our position on a rule-based order, international rule-based order.
How would you rate the chances of the political situation unraveling and prompting political instability in the government and in the country?
We don't see that happening.
Zero chance of that.
We have elections, as I mentioned earlier. We have a midterm election this year. It would appear to me, coming from Congress before, coming from the House, the Senate, I've had many elections in the past, prior to me being here the Secretary of Finance. And I could see that the administration will win a majority of the local government positions, 80%, I suppose. I think Congress, 80% will be also won by the administration. Same thing with the Senate, 8-4, 9-3. The survey shows that majority of the candidates of the administration are leading in the polls.
So you think that the position will be strengthened after the midterm elections?
That's correct.
I want to touch on tapping the global market, international market.
Yes.
I'm just wondering whether there are plans to do that. I mean, are you interested in the
still a balance, yes.
Yeah?
Our financing mix this year is more or less 80% we borrow domestic, 20% foreign. We already borrowed in January, when we were in Davos, we issued a $3.2 billion and euro bonds, dollar and euros. I think our balance for the year is very small, maybe $250 to $500 million. So we've already done that. We've already front-loaded the foreign exchange that we need.
So there's nothing else that you're going to need. And what will prompt you to tap the market, whether it is the U.S., whether, panda bonds, samurai bonds?
Well, right now, it doesn't appear that, I think we've got it covered already for the year. So very minimal left. Like I said, 80% we will be borrowing domestically. We have program loans with the ODA partners. We have project loans for the infrastructure with ODA partners,
Right.
so that's part of the financing mix.
Secretary Recto, we thank you so much for your
Thank
time.
you.
There you
Thank
have
you.
it. Philippine Finance Secretary Ralph Recto, with me, of course, here live from Manila. Dave, handing it back to you.